When we talk about mitigations, we know that we want price to tap into something in the premium or discount of the previous leg of price. But what we really mean is for price to tap into a valid supply or demand zone in that region. On the charts, you will find certain zones that will show where there has been a large amount of buy orders before a huge sell-off, and zones where there has been a large amount of sell orders before a huge buy-off. This is why you may have heard of supply or demand zones being called buy to sell or sell to buy, respectively. You may also have heard the term order blocks, as well as seeing them referred to as areas of interest or points of interest. Here are two examples, one of a typical valid supply zone and one of a valid demand zone. As you can see here, what defines a valid supply is that it is a bullish candle before a bearish break of structure. And what defines a valid demand is that it is a bearish candle before a bullish break of structure. Sometimes the zones are less clear than those shown in the previous examples, and there are different ways of viewing certain zones which are still absolutely valid, which we're going to go through now. The first is the wick refinement zone. If the candle at the extreme has a large wick, we can use the wick as the valid zone, even if it's a bearish candle for a supply or a bullish candle for a demand. The double candle refinement. If, like in this example, the extreme candle is bullish at the demand or bearish at the supply, you have the possibility of adding the candle before it as well to make one larger zone, as the two candles together still represent one buy to sell or sell to buy move. The double wick refinement. In long legs of price with high momentum, you may not see any clear zones. However, you can use wicks like this as perfectly valid zones, as two wicks together add up to one either bullish or bearish candle. Okay guys, so we're back on the charts with our mapped out structure, and now we'll take a look at supply and demand zones getting mitigated to the premium or discount. So some examples. Okay, so if we take this first bearish major swing leg down and we pop our premium and discount tool on there, what you can see is that price has just tapped into the premium here, and now we need to kind of discover what did it tap into. At first glance it might look as if it tapped into this, the tip of this wick, but it's actually slightly just gone above that into this zone over here. So what we can mark out is exactly that, these two wicks. It's kind of a double wick refinement zone the price has tapped into right there, before continuing to the downside. Okay, now obviously there is some minor structure that went on here before that, and minor structural breaks along the way, but for this video, to keep it simple, we'll just for now focus on major structure and supply and demand zones within that. So let's move on to the next one. So we have our swing high here and our swing low down here. If we mark on our tool, here we go. What do we see? We have a fairly obvious supply zone that price tapped into over here, which would be this candle. It's a bullish candle. When it's got such a big wick like this, you can just use the top of that wick to refine the candle down a little bit more, but it's also valid just to take the whole thing. It just depends how big it is and how much you want to refine your zones down, and we'll go a bit more into refining down zones later in the course, a bit more advanced supply and demand stuff. But just for now, this is absolutely fine, and as you can see, that mitigated that and ultimately went on to break the major structure to the downside, and that was very much in the premium of the previous leg. And then what do we have? We had a change of trend here. Obviously the next thing to happen was to break a bullish break to the upside. So if we look at price anyway, what did we see when price hit the premium between these two legs? Well, I've said this before, what we're really looking for on these high time frames are reactions, and once we hit the premium right here, we did get a reaction to this zone that would have given you enough for sells if you were looking to get involved on the lower time frame, such as the 1 minute. You'd have certainly made still a good amount of R with that move right there. Now, what most likely has happened here is that we've tapped into an unmitigated zone on a high time frame on the 4 hour, which made sense for price to move up from there. So if we go to the 4 hour now and see, what you can see is we had this minor structure, bullish structure building up here, and this is the area that we've just seen price tap into. And as you can see, previous 4 hour bullish structure was this, between this low and this high, and the area that price tapped into was very much in the discount of the 4 hour bullish leg. So you know, that's something to look out for across time frames as well, just because, you know, we have major bearish structure on the 15 minute. Be aware of what's going on the 4 hour, because you may have tapped into a demand zone when the 4 hour is currently bullish. So yeah, that's it. Price will usually make sense in some way. So if we then carry on, what we can see is after this break structure, we didn't mitigate this this discount before continuing up. So this zone is still open for business, and I would leave this premium discount tool on there to show or to remind myself that, you know, if price comes back down here, this is a very valid area to look for longs. I'd particularly be looking at this demand zone down here. That looks very clean to me. You see, it's a bearish candle before a strong bullish break of structure. The candle is engulfed by the candle next to it. As you can see, there's a lot of candle body here that closes above the previous candle, which is what engulfed means. And ultimately price goes on to break major structure from this point. You know, there's every chance that price will want to come deeper into a different zone, such as this inside bar right here, and that's a perfectly valid zone as well. I may have said it before, but an inside bar is a candle that trades neither above nor below the candle to its left, so it sits inside the previous candle, and that shows there's been a range on a lower time frame, and price has been exchanging hands right there, and thus making it a valid supply or demand zone for that reason. So yeah, if we take into account everything, we could very well see price come back down to this zone at some point. I imagine this is also a valid 4 hour area. If we go to the 4 hour as well, and we see, oh yes, we had, just to clean this up a bit, we had this 4 hour sell to buy right here, so that would be our 4 hour zone right there. That looks quite clean if price was to, as we've broken structure now on the 4 hour. So if I just draw that on there, so yeah, if price were to come back down on the 4 hour, this would be well into the discount of that, and it's just a case of refining down on the 50-minute time frame to a smaller zone, which would make sense right here. So yeah, other examples of supply and demand zones, perhaps on minor structure that we've got. Let me just clear up some of these premium discount tools that we don't need anymore because price has mitigated them. Well, let's have a little look at minor structure. We have again minor structure here, and there's often a case that you'll get minor structure that builds its own major minor within. So for example, you know, we've got our obvious major swing high and swing low here. Then what we get at this point is a minor breaker structure up here, and then that minor structure itself doesn't get mitigated quite, or maybe just slightly, but doesn't get mitigated. A supply or demand zone doesn't get mitigated, and that's another part of order flow and major and minor structure as well that I wanted to get into in this video about supply and demand zones. If a valid supply or demand zone isn't mitigated, but price does come to the discount or premium, in this case it only just taps into the discount there, but it does, you can, it's kind of a 50-50 mitigation, so it's technically mitigated and you can say price has done its job. However, if price does come back to this area at some point, it is still open for trades and reactions because we never caught any of those valid supply or demand zones. And so in this case, I would have this zone still open and ready. I'd leave this premium discount tool on to remind myself of that fact. And as you can see, we did get a reaction to that zone as well. There was also this valid zone above, which is a double wick refinement zone. And as you can see, that did also get some sort of reaction from it. You know, if you were getting a trade in there, you'd probably gone to break even at least, if not made some R. So yeah, that was a valid zone as well in this discount. And this one as well looks like it just got blown straight through. So yeah, that's an example of another potential demand zone there. And you have also price at the top here. We've had a minor break of structure, bearish, after mitigating this major supply zone, and then we've created a certain wick refinement zone up here. So this is a case of a wick refinement zone where, yes, this is a bearish candle at the top of a move, but a wick is representative of a buy, so that is absolutely valid to as a supply zone there, the same way as a wick such as this down here, or this little wick down here would be valid. Sorry, it would be on a bullish candle for a demand zone. Oh, so for example, if there was a break of structure here, this wick here would be valid as a demand zone. And that is what gets mitigated right there before price continues to the downside. And then what we had over here was more minor within major. So as you can see, we had this minor break structure down, which was never mitigated to the premium. And then price later on comes and taps into that. And this is quite an unclean area that price taps into. And you can see it's kind of, you know, you've got these wicks within the zone. This is the kind of area that you'll probably want to go down to a lower time frame to really see more clearly, because as you can see, even with a wick refinement, price doesn't actually tap quite into that zone. But if you have it like this, or if you refine it down to these wicks, price goes through them. So it's ultimately not that clear on this time frame, but we will do another video on refining zones down on lower time frames. But ultimately, this is the zone that worked out for that trade. And moving on, more examples. What I would say was, again, this is an example of another wick refinement, for a demand zone that I was looking for earlier. We had this break of structure here, bullishly, and then price came and tapped into this zone right here, which is a wick refinement, and continued to the upside. So we've had examples of double wicks and examples of wick refinements. We've had examples of just standard zones like this one, and inside bars. So yeah, I mean, it's a fairly simple concept, supply and demand zones, and we will go into more detail on refining down to a lower time frame in another video.